Let's bring in Tom Lee, Fundstrat co-founder, managing partner, and Fundstrat Capital CIO. And I can just see you. This is Tom playing out exactly as you said. Choppy. You said exactly this. You said choppy for how long? But then the S&P again starts moving, and this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, you know, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and DOGE are, you know, the DOGE is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, you know, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline
yes,
for financial markets, or a continuation of a very expensive, you know, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that, wouldn't you?
Yeah. I think, or even rebuilding parts of the, you know, the U.S.
Right, exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, I mean, you know, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than one or two rate cuts, I could see the market rallying on that.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think, the Trump put comes back. So I think it helps markets.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? I mean, let's say we do have a softer jobs report. I mean, the Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. You know, the Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, you know, it could be well under 100,000. And if it is, I think the Fed would actually have to get off their hawkish paws.
What is a fundamental and the technical backdrop for bottoming happening this coming week?
Well, you know, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion. But we've seen sentiment turn negative. So maybe Friday, you know, but it could have already bottomed too.
Recently, Gil Luria, a tech analyst from D.A. Davidson, shared some thought-provoking insights on Nvidia's unexpected trajectory alongside Tom Lee. Speculations are swirling as the chipmaker's fiscal year 2025 revenue more than doubled, yet the growth rate is anticipated to slow. Stay with us as we unravel whether Nvidia's golden age is tapering off or if there's more to come beneath the surface. Welcome back, everyone, to Investocracy.
Obviously, one of the reasons for the weakness in the market at the index level, specifically, is Nvidia, which is down again. Take a look at Nvidia today.
Yeah.
It can't get any footing from earnings. It's been down about 5% today. It's off more than 11% year to date. it is the big issue along with momentum. You're out of it completely now.
I am out.
When did you sell the rest of it?
I sold the rest of it when they reported earnings. So it's I didn't get it on the other swing of the earnings because it went into the green. I sold it when it started to go into the red. Look, there are a few issues with Nvidia in my view. One of them being that with Apple, for example, you're starting to see them make their own chip, and others all have plans to. It's got competition. Also, it's been reported that Nvidia that China is buying the Nvidia chip through other countries. So I think that's an issue for them. And then finally, when you take a look at what tariffs could do, and Taiwan Semi has been called out for tariffs, that stock's really gotten hit. It's not reflected here, but they'll pick up the excess capacity.
Well, they're about to announce, we think, according to the Wall Street Journal, a $100 billion investment in the U.S., something you may hear more about as the afternoon progresses.
Right. Most of which, frankly, has been announced already. But the point on NVIDIA is that a lot of people didn't even know why they owned it. They owned it for the momentum. And they owned it because they didn't want to sell it because of taxes. And I think part of the hit to technology overall is that those that came into the year saying, okay, I'm going to wait to sell until the next year, 25, and hopefully pay lower taxes or just delay my taxes for a period. They said, you know what, I can't hold on anymore. So it's a combination of factors that hit that in tech. But it's really notable that the only 2 of the 12 sectors that are down year to date in the S&P are information technology, which is tech, and consumer discretionary.
Which is obviously heavy weighting towards Tesla and Amazon.
Exactly. And I actually am still negative on the market, not bearish, but still negative, and looking to raise cash. That's one of the other reasons I sold NVIDIA.
All right. NVIDIA moonsaulted through fiscal 2025 with its revenues doubling to an extraordinary $130.5 billion. Yet, amidst the celebration, D.A. Davidson's tech analyst, Gil Luria, takes a decidedly cautious stance. In a recent interview, Luria predicted a deceleration in NVIDIA's growth. The tech giant finds itself at a crossroads, with a substantial portion of its profits largely tethered to industry heavyweights Microsoft, Meta Platforms, and Amazon. Luria points out that these pivotal customers are signaling flat capital expenditures, suggesting a plateau on the horizon. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
What about Weiss saying, you know what, you got all these cross currents now in the name, hasn't traded well since earnings. Right. The only time it's really traded, quote unquote, well was pretty recently into the print, 5 days or so into the print. That's it.
Yeah.
That's it.
Yeah. And guess what? The print was obviously solid. It was up 70%. Sales were up 70%. Earnings were up 70% year over year. $35 billion in revenue on the data center, which is up 93% year over year. We were expecting $42 billion for the guy. They guided to 43. But to Weiss's point, I think export controls are obviously a concern. There is some third-party selling via China, where folks are buying their GPU chips. There is absolutely continued demand, but I think, it's obviously decelerating. We can't see 100% year-over-year growth in on these metrics quarter after quarter and year after year. So I think that's what a little bit of the digestion is.
And Jason said this, and I keep emphasizing this over the last several weeks, but it's the deceleration in revenue growth. And that's, in fact, exactly what it is. NVIDIA's 79% revenue growth. Okay, 1 year ago, we're talking about 265% revenue growth. And you look out into the future, 4 quarters from now, you're talking about probably 40 to 50% revenue growth. So you're not going to pay the exorbitant premium that you did in 23 and 24 for that slowdown in growth, and you're seeing some of that slowdown in growth in other areas of the Magnificent Seven. I candidly think where NVIDIA is right now, and unfortunately, to a certain extent, it's been gamified, and we've talked about that on the show. These zero-dated options, the intense activity that's going on in the option market that drives it on a particular day. But I really think that NVIDIA might just be in a prolonged consolidation phase, and I think the viewers and investors overall are very unfortunate unfamiliar with that type of a setting. But if you go back through the course of history, it's not uncommon.
Some market pundits, like J.P. Morgan, argue that Nvidia's story is far from over. They foresee the weak seasonal trends of the year's first half being offset by burgeoning demand in PC gaming, data centers, and automotive industries. Kevin Cassidy from Rosenblatt attempts to inject optimism, urging investors not to fret over short-term gross margin pressures. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, so to your point, Nvidia did reverse Friday's, 4% gains and then some. But the big concern right now is looming export controls you mentioned. And I bring this up because Singaporean authorities arrested 3 individuals for fraudulent misrepresentation of the destination of U.S.-made Dell and Supermicro servers. So this past weekend, the reason why it's coming up now is that Singapore's Minister for Home Affairs and Law questioned, quote, whether Malaysia was a final destination. And so that's suggesting possible re-exports to China. Nvidia, of course, is not declined to comment to me. Singapore, though, unexpectedly became Nvidia's second largest revenue source back in 2024. Nvidia clarified that selling to Singapore accounts for 18% of total revenue in fiscal 2025, so that's about $24 billion, while shipping to Singapore represents less than 2%, so about 500 million or so. So there's a big discrepancy between both. And in Nvidia's most recent annual report with the SEC, they said, quote, customers use Singapore to centralize invoicing while our products are almost always shipped elsewhere. So they're trying to tell you that Singapore is not used as a backdoor for China. However, analysts at Mizuho warned today a potential ban on Nvidia chips, specifically the H20s, to China could remove roughly $4 to $5 billion in revenue for fiscal 2026. So there is that overhang for the stock, because in a world where computational power equals geopolitical advantage, and I'm calling it the silicon smugglers game, continues with implications far beyond corporate earnings.
Nvidia's current phase could be a strategic pause before an anticipated growth spurt driven by expanding technological needs. The ongoing hunger for high-performing GPUs, especially in breakthrough arenas like AI, ensures Nvidia's products maintain a high market demand. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.